Wednesday, August 14th, market analysis, Stan Ehrlich. Good morning. Almost 10 o'clock California time, about the middle of the trading day. I start out with stock market indexes, as you know, go to futures, and occasionally, cycles, forex, crypto, seasonal tendencies, a variety of other things. Here we go. Generally speaking, as you know, I have been looking for and started to talk about it about a month, maybe a month and a half ago, that the market was due for a correction, and October has historically been an extremely reliable month of the year when the market bottoms out and starts to go back up again. Now, not all of the bottoms in October are profoundly huge. Some are minor, but nevertheless, since 1997, it's only missed 3 times. That's over 90% of the time for over 30 years. The market has, in fact, had a low of some significance and frequently a huge significance, like major multi-year occasionally bottoms in October. Don't forget that. Very important seasonal tendency. And there's the Santa Claus rally, which works pretty well, but not as good as the October lows. Now, I do think we're on our way down in general to the October lows. We have had a week and a half of strength after the market got oversold. No surprise that since the market got oversold, it's going to bounce. Now, in the E-mini you're looking at, daily data chart, we did get a buy signal, an official one, on August 8th. That's a bullish engulfing and in my custom bullish engulfing candlestick, it's slightly different than the traditional version. Plus, we got oversold on my custom relative strength index, and that I learned from RSI, learned from Wells Wilder himself during the late 70s, 80s, and maybe even early 90s. I was part of the international lecture circuit, so I met Wells several times here and there, and we became friends. So I like RSI and stochastics, which is similar, by the way. Both are momentum indicators of sorts, oscillators definitely, and they're used in similar manners. Now, we're not quite yet overbought, and we're not even all that close. We did rally up to levels which I had forecasted, but we didn't stop. Yesterday, we went right to it and through it. Very strong up day. And today, a little bit back and forth. Opened a little higher, got to a point or two lower, then got to a point or two higher. And right now, the E-mini is up about 10, which is translating to about a point and a spider. So that's what I meant, the spider. A couple of points lower, which is 10 or 20 lower in the E-mini, et cetera, et cetera. So maybe we're losing upside momentum. Looks like could be. Can't really tell yet. We are approaching my best resistance area. And since we already blew through that one, so around 5,500, maybe 5,518, let's call it 5,520, we could get into a position where we're going to reverse and come down again. But I think at any point, I'm trying to pick that it's happened, and I'm not sure that it's starting yet. I think we're going to turn back down and go all the way back down to new lows completely. Since we're now basically in the middle of August, I've only got 6 more weeks, September and then the beginning of October, until I'm looking for that low. So that's enough time, plenty of time, for this market to go down and make those lower lows. That's the overall opinion that I have in the indexes in general. Now, each index has its own little idiosyncrasies. So here we go. I am long from the ER signals buy signal on August 8th. The yellow dotted line is my automatic, 100% automated trailing stop, which is now protecting a pretty nice profit considering yesterday's very big rally and a little bit further today so far. And the detail of the trade is on the 5-minute chart here. Let's show you where I got in. And we got into the trade, late in the day on the 8th, close to the close. And for about a day, we had a little bit of trouble, but the stop never got hit. And that's our trailing stop, 5-minute by 5-minute. And it does adjust every single minute. This just happens to be a 5-minute chart. As you might notice, this stop does not trail by a fixed amount, which is typical in most trading platforms, or a fixed percentage. It is, and also make progress going up when prices make new highs, which would be basically the fixed amount. But it also has a feature in it where it pays attention to oscillators. So as the market moves up and moves up faster, this stop gets closer and closer to the current quotes, which is done. We're not stopped out yet. You can see how close it is now relative to where it started, which was that distance from the current quotes to the stop, even there. So I'm not going to be surprised if we don't take a profit on this trade relatively soon, and that hopefully will indicate a turnaround and the market beginning to go down. Spider, no buy signal here per se. We did get oversold on the bottom. And what's interesting about the SPY chart, daily data, is that the head and shoulder top formation, first shoulder on June 20th, top of the market, the head of the formation, I'll give it a day or two left and right, but around July 15th. And the last shoulder high, which was on August 1st, which in itself, August 1st, was a bearish engulfing. Unfortunately, it wasn't overbought, so I didn't get a red sell signal like we did here, almost at the top of the market and at the top of the shoulder. That's nice, on June 20th. These signals didn't work out quite right. Now, I drew the neckline in, which is slightly downward slanted on the pattern. Head and shoulder tops and bottoms are my favorite pattern. They're a bit complex, but they're, well, my favorite pattern. I've seen thousands of them in over the 52 years that I've been involved in the business. I started as a runner on the Mercantile Exchange on Franklin Street in Chicago. It's torn down like 15, 20 years ago. Now, look at how steep this is on the way up. We got 1 day up, 2 days up, 3 days up, 4 days up, and at the moment, up a little, very little on the spider. But that's 5 days in a row up. Am I implying it's overdue for a break to the downside? Sort of, yeah. We went through the resistance, but in general, we're back up into this head and shoulder top trading range. So it's not very well defined, but I've got no problem with it topping out in this situation. Now, you're going to say, yeah, Mr. Ehrlich, you went above the neckline, and that kills the head and shoulder top formation because you rallied above the neckline. Well, wait a cotton picking second. We broke out of this head and shoulder top on the downside on August 2nd, and the next damn day, August 5th, Monday, we reached the minimum downside objective almost exactly. Done, gone. Pattern worked in 2 days. Very rare that it would do it that fast. But the pattern's not, relevant anymore because it worked. Past tense. I'm still showing it because it's nice to see it work in 2 days. So we're now simply basically back up into resistance, and you can skip the head and shoulder top commentary at this point. Next is the spider 5-minute chart. We do have a little gap to close below the market from yesterday's strong market. On the opening, it gapped up and couldn't quite close the gap completely. I don't know. I have to say the same thing that I've been saying a couple of days now, and it keeps on going up. But I think we're cruising for a bruising here. I think we're about to turn around and head south. I'd love to see a bearish engulfing. Even if we're not overbought, it would still imply to me, because it's one of my favorite price action signals, just the way the market moves, has nothing to do with oscillators or anything else, and moving averages, et cetera, just a bearish engulfing implies the market's going to go down. We don't have it yet. We do have higher highs across the board today. So if there was some kind of a big break, we might have bearish engulfings. Next, QQQ. Gap to close under the market from a couple of days ago. I know there's support under the market, but I'm expecting that not to hold. We did get down quite a bit. Unfortunately, we missed by, I believe it's 24 hundredths, 24 ticks to making a higher high. If on July 11th we had made a higher high, we would have gotten a bearish engulfing sell signal, which we did on a couple of the major indexes. I'll show you in a moment. So, top, oversold bottom, rally, not quite overbought yet, but resistance above the market. Don't see too much more elbow room up. And at any time, I'm looking for it to turn down, and maybe for a week or two at least. Remember, it's still 6 weeks until October. Next, QQQ, 5-minute chart, and a general area of resistance here. So let's see what happens next. Bearish expectations. Now, we did get a bearish engulfing ER sell signal on the top of the market to the exact day, July 11th. Overbought conditions, bearish engulfing, bingo, turns red automatically. The moment all the criteria is fulfilled, and enter a new short position for ER1 scalp and ER1 overnight. And depending upon how you want to handle the trade, you could have easily, with a slow moving stop, rode this all the way down. I just don't have those parameters in here at the moment. Now here at the bottom, almost the lowest low, it's the second lowest low. A few days ago, we got a green bullish engulfing, and we're still long. Here's the yellow trailing stop, protecting a profit at this particular point. It looks great. My opinion has nothing to do with the strategy. So the strategy is making money, and I'm trying to tell you the market's about to turn down, and I think I'm going to be right, but the strategy is still making money, which is good. So let's see what happens. We might move up a little bit more for the next day or two or three, but I think we're very, very close to turning down. Next, NASDAQ. Here's the exact same trade, actually a couple of them. Oh, that one was a big one. Got short on July 12th. The green dotted line is the trade line, which is drawn from the beginning of a trade until the end of the trade. If it's green, it's making money. We got stopped out right there. There's our trailing stop. Now, the current trade, we got long near the close on the 8th and rode it up until now, and we're still long. But look how close our stop is getting compared to where it was early in this trade. We squeeze into certain technical conditions on price action in order to trap bigger and better profits more and more quickly. I'm not telling you we get out of the top all the time. We don't, or the bottom, if we're long or short, respectively. But we do get in to the trade at the high day and the low day very frequently. That's what the strategy is originally developed to be, picking top days and bottom days of small, medium, and large longer-term market trend changes. Next chart. The YM Dow futures, we did get a sell signal on the high day, exactly what I was talking about. And on May 20th and on April 1st. and the bottom day on April 19th. So that's a top. That's a bottom. That's a top. Too bad we didn't get one down here. That's a top. And guess what? We just had a few days ago a buy signal, August 8th, and another one yesterday. That does not necessarily mean the market's going to go up a lot more because you got two signals. In fact, there's no particular historical reference to it's going to be bigger, better, faster, or anything like that whatsoever. It just happens to have two signals. But it's the first one's working great, and that's the one that's important because that's the one you got in at the lower levels. Next, 1 minute on the YM, green because we're involved in signals. Next, Russell, yesterday, buy signal. Long, but already got stopped out today because earlier today, the market went way up to here, pulling the trailing stop up minute by minute. You don't see that on the daily data chart, but you do see the yellow trailing stop, and we got bumped out right there today. So this trade only lasted about 24 hours, a little less probably. And profit, done, gone, end of story. Worked out nice, we're flat. This chart is showing a lot more weakness, a lot more quickly, the Russell. So we're currently down at the moment some. Based on the other indexes, it's about the only one that's net lower on the day. NASDAQ is down 32 at the moment, but we're still up a little bit in the spider and the E-mini, of course. Okay, and the Dow. I don't know. I distinctly get the feeling today could be it, but don't jump the gun. I'm not proven right or wrong yet. So I'm waiting. Next chart. We were in the Russell trade. And as I said, because of that sharp rally this morning at 5:30, yep. When was a CPI, I think, come out, Consumer Price Index was 2.9. And I don't mention fundamentals very often, but that the market loved, but it didn't hold on to it. When markets get good news, and they have been going up a chunk already, they have moved up on anticipation of the news. As I've said before, markets move on anticipation and reverse on realization. The Russell seems to be, so far, one of the best examples of that. But the other indexes just really aren't turning negative yet. They did for a while. Okay, next, bonds rallying a little bit more. We have a little problem with my analysis in bonds, and here it goes. If you take this date, March 2nd, 3rd, as the shoulder low, I'm disregarding currently what happened 2 years ago, October of 22. That's not part of this discussion at the moment. That is the shoulder low. The head of the formation, head and shoulder bottom, is October 23. Notice it's October. And the last shoulder low is around, give or take a month early, or maybe even late, but approximately June 3rd, which is about the same amount of time from the bottom of the market to the right as it is the bottom of the formation to the left to the shoulder for shoulder. That's symmetry. Head and shoulder tops and bottoms are relatively symmetrical most of the time. Occasionally, they're extremely symmetrical to the day. That's great. But if you're within, say, 5% of the time frame, that's pretty good. And this is within 5, 6, 8, 10 maybe. So it's good. Now, the neckline is obviously across that pivot point right there, the highest high after the first shoulder, but before the head, and the highest high after the head of the formation, but before the last shoulder low. So that's it right there. And it bumped against it and stopped it, because you can draw the line after that high was made a few days later. Bumped against it, stopped, bumped against it, stopped, and finally started to go through it. Now that implies with a big rally breakout, the neckline's good, pattern's good, and you're on your way up to a minimum upside objective of 140-ish. But I really am fascinated with these two little lows back here in October of 22 because we have a low in October of 23. And guess what? In 6 weeks, we got a low coming up maybe in October of 24. And that circle is during the October month this year, only 6 to 10 weeks from now. The top and bottom of the circle is in the price range that I think we're coming down into. So I've drawn a circle in the time frame and the price range that I think we're going to see a low in bonds. And if that happens, then we should be going all the way back up to the minimum upside objective, except I think that could be a shoulder low and not this one, because then the time frame from October 22 to October 23 to October 24 will match symmetrically, and my new neckline will be here, which will raise the upside objective a lot to probably something way up here to 145. But that's not relevant yet. This is the relevant formation right now, and this is the relevant upside objective right now, and that's 140. End of story. We'll see in the next few weeks, several weeks, if I am right or wrong. And of course, if I'm wrong, we'll just simply go sideways to higher. But if this market starts to turn and start to dribble off and make some minor new lows, I think I'm on the right track, zigzagging its way down. Sorry I spent so much time. 10-year notes is the same story. Next, crude oil. Resistance stopped the rally. Didn't quite get overbought. Now today, big down day. Yesterday, also a fairly good down day. And I think we're going to be heading down toward the bottom of this very large pennant formation. Pivot point, bottom of the market, pivot point, tested it, came close, bull trend line at the bottom. Bear trend line across the top, across these 2 points, stopped 1, 2, 3 times over about a month time period, right around the neck, right around the bear trend line. And so we're getting into the tip of the pennant formation ever so slowly. We're between a rock and a hard spot. Next downside move is probably 72-ish and a half. Natural gas. Still rallying, minor new high since the oversold condition. About, I think, to top out, getting toward the resistance area. A bunch of previous lows, tried to hold the market back on July 8th, bounced a little bit, hardly anything. Even a buy signal at the right place at the right time, well, at least right place, has nothing to do with time, frankly, didn't work. And it just dropped like a rock. So I'm still bearish, and I think I'm going to get a downturn pretty soon, maybe after it gets into the yellow zone. Next, high grade heating oil. Pretty much the same story. Got oversold, rallying. I think it still has enough zip, pop, bang on the upside to get up to the resistance area. But bear markets fall faster than bull markets go up. A lot of people say twice, maybe 3 times faster on the way down, and I totally agree. Bull markets, they say, climb a wall of worry, a very old saying. It's true. Bear markets collapse, panic on the downside. They go down much faster. Okay, so I'm still bearish on heating oil, looking for a turn, not quite sure we have it yet. Looking for a test of the 2.2 range. Next, gold, silver, platinum, and copper. Got some really important stuff here today. What's that? That is a bearish engulfing. We're down near the low of the day, 27.8 lower, quite a bit. Sell signal from the standpoint of a bearish engulfing candlestick. unfortunately, no red bar because we didn't get overbought, and that would have turned red. And frankly, I didn't get one sell signal across all these tops, which is not nice. But I did get overbought over here and over here and over here. So that was a warning. That's what yellow means. And the traffic light, it means watch out. It's about to change, to red. And if I remember correctly, in some countries, it actually turns yellow from red to green. And of course, from green to red in either direction. It's like on your mark, get set, go from red to yellow to green. Anyway, gold is turning down. Great. I've said so for the last couple of days. I thought this was going to happen, and it's happening. I think it's going to break down to 2403 and probably 2350. Next, we have a bearish engulfing also in silver, which again, I've said in the last week, last few days, I didn't trust, I didn't want to trust, I didn't think I should trust the buy signals that we got. Now, great. Buy signal at the bottom of the break in a support area, oversold conditions, perfect. It did rally for 2 or 3 days. There was profit potential. I just didn't want to go very far or for very long, which it didn't. Then Monday, we got another buy signal. I said the same thing. Today, we've broken the lows of Monday's low, killing Monday's green buy signal. And if you chose to do something about that, you probably lost a little money. But if you chose to do something about the one in support and a better signal, in my opinion, more classical, you almost certainly would have made some money unless you were silly enough not to raise your stop very quickly. That is what we have learned, I have learned to do. Once I get a profit in a trade, I hate giving it back. Of course, it depends on how much profit, not how long, because sometimes they can be really great very, very quickly, not typically. So this is on its way down again. Bearish engulfing silver. My downside objective I've been talking about for about a month now is 24. Platinum, the same thing. Head and shoulder top, small head and shoulder as the last shoulder of the big head and shoulder top. Worked past tense already, come and gone, the small one. The big one has a downside objective to 808. And today is a bearish engulfing in progress. I think it's about to make new lows very soon, maybe this week, very possibly this week, and be on the way down to making total new lows for many months and getting down to my minimum objective again, 808. Next, high grade copper has a higher high today, but not yet a lower low. It's not a precious metal, just simply a metal. Getting to be more expensive over the decades, of course. And, whatever. So we have a bearish engulfing, maybe, if we can get below yesterday's low. Now, we had a small day trade loss on a bullish engulfing on Monday, stopped out with a small loss on Tuesday because of the size of the break. And today, no upside follow through, and we're currently lower. Again, like the other metals, I think this thing is about to break down and make new lows for the trend. Soybeans, oil, meal, corn, wheat, cattle, and hogs. Beans. What can I say? I have been bearish for months. I don't know where this is going to stop. All I can say is oversold conditions. Third day. I'm expecting a minor low. The rally should probably be up to about 10, 14. It might get a little bit stronger than that, but the brick wall is 1105, which I do not think at this point we have enough zip pop bang to get all the way back up to there. But that is not to be forgotten. Next, soybean oil. Almost another new low for the trend. Maybe it'll happen yet today. Now, it's been weeks since I abandoned my previous possible I was skeptical all the time. Major bottom, too bullish, gigantic. I talked about a ridiculous 93, I think, upside objective on this, out of place, too large in time, head and shoulder, and it's not anymore. Forget it. Now we're back with the other grains into a bearish trend, and I do believe we're going to make new lows below the May low of last year. Yeah, May 31st or so. Or is that, yeah, that's good. Bearish pretty much in all of the grains. But, bear markets have bounces. We're oversold at the moment. And hey, there could be a little tiny double bottom here. But again, the first objective would be 42 and a half. And then maybe 44. And I really can't rule out something a little bit better, but I don't think it's going to happen. I think the major problem is the 42 to 40, yeah, 42, 42 and a half area, stopping any rallies. Next, meal, oversold at support yesterday. Today, again, about the same lows. Support, still oversold. We're getting ready to bounce, I think. It could be, should be up to about 320, maybe 323. And I can't rule out the 340, 41, 340, 40, 341 area. But this is still an intermediate to long-term bear market. I don't see anything preventing it from going at least down to 288. And I frankly would be expecting lower levels. I'll draw in some more historical data in the days to come. Let's see it start to break down. And it might bounce first, remember, third day oversold at support. So if it rallies a little, maybe that's going to be a really good short sale. Next, corn, same story, except for wheat and corn. Wheat comes up next. I've got 3 buy signals. Sometimes these signals are not the bottom like that one on February 26th or that one on November 29th last year. This one could have made a little bit of money for a day or two. It's a little iffy. That one looks like it was a losing trade, but it depends upon how tight you want to move your stops, how quickly, what kind of trader you are. Just change the inputs and the strategy and leave the strategy do its thing. But yes, you do have a little control. Not on the entries. They're great. It's on the exit that you can control how quickly you want your stop to move or slowly. Are you a scalper, swing trader, position trader, investor? Stops move differently. Next, wheat. We've got 4 bullish engulfing signals in the last approximate month. That's unusually large number. I've seen 3 lots of times like corn, and 2 is not uncommon at all. Sometimes there's only 1. There's only 1 back here at this bottom. Well, actually, there's 2 in a row, 2 greens. That did not work. That's a buy signal on that minor low. And I'm not going to bother to go back historically. So, are we getting ready to turn back up again? Remember, I've got some reasons on the other grains because of oversold conditions and or at support and or combination of bullish engulfings to believe there's going to be a little rally potentially soon, very soon. But I'm not bullish. I'm just friendly for a rally and a bear trend. Next, cattle. This bullish engulfing is working great. I frankly am rather pleased and a little surprised, but it's doing fine. Today we have another new high and our stop is trailing very slowly. I probably should change the kicker on this to move it up faster. And I could, and I probably will for tomorrow, raise the rate at which the stop goes up so that it locks in a profit. Next, hogs. Not doing too much except a sharp rally up to resistance. I don't have much faith in this move up. We had on a previous chart of hogs because it was not the October contract, it was an earlier contract month. When we rolled over, we lost a pattern that was evolving on that previous month, but it expired and didn't live long enough. So the October hogs are simply bouncing up into a resistance area. Don't have much faith in it. I'm looking for it to hopefully give me a sell signal after this rally is over, and it should be over between 76.5 and maybe 78 and 3/4. Next, bullish engulfing at the bottom on the E-mini. We're back to this, and we're now climbing up a little bit again. Let's look at the 1 minute or 5 minute chart. Not much, not really much. So you guys have a great day. Profitable trading to you. See you tomorrow.